Honestly, just a few years ago, I was a complete beginner, staring at stock charts that looked like a foreign language, absolutely terrified of losing my hard-earned money. But by sticking to a specific strategy, one that I'm about to break down for you, I managed to triple my investment. This is the story of how I combined the safety of index funds with the power of smart stock picking to get a 200% return. And I'm going to show you exactly how you can start applying these same ideas today. Let's rewind, because my starting point was probably a lot like yours. I had a little bit of savings tucked away, but it was just sitting in a bank account, collecting dust and maybe a few pennies of interest. I knew I should be investing. Everyone says you should, but the fear was paralyzing. What if I pick the one stock that tanks? What if the entire market crashes the day after I put my money in? The whole world of investing just felt like this exclusive club for experts, and I was definitely on the outside. It's a feeling called analysis paralysis, and it's a real thing. You hear horror stories about people losing everything, and it makes you want to just cling to your cash for dear life. But here's the problem I finally understood: inflation. It's the silent thief that chips away at your savings every single year. The very money I was so scared of losing was already losing its value just by doing nothing. That realization was the kick in the pants I needed. I finally got it. Doing nothing was a guaranteed loss. So, how did I get started? It wasn't a straight line to success. It was a process of learning, making mistakes, and tweaking my approach. The strategy I landed on is something called a core satellite model. The easiest way to picture it is to think of building a solar system. First, you need a sun, the core. This is the big, stable, reliable center of everything. For me, this was built entirely on a low-cost, passive global index fund. An index fund is basically a sampler platter of the stock market. Instead of betting on one single company, you're buying a tiny piece of thousands of them from all across the world. This gave me instant diversification on a global scale, which is just a fancy way of saying I didn't have all my eggs in one basket. It is single-handedly the best way to lower your risk. I also committed to something called dollar cost averaging. It sounds technical, but it's dead simple. I invested the exact same amount of money every single month, whether the market was up or down. This takes all the emotion out of it. When prices are low, your money buys more shares. When prices are high, it buys fewer. It's a disciplined, almost boring approach that was absolutely crucial for building that solid foundation. Once my sun was in place, and this made up about 80% of my total portfolio, I started adding the satellites. These were my individual stock picks making up the other 20%. This is where the real growth potential was, but it was also where the risk lived. And this part required homework. I wasn't day trading or chasing meme stocks. I focused on a handful of companies and fields I actually understood. I sat down and read their annual reports, listened to their earnings calls, and tried to understand where they were headed long term. And I absolutely made mistakes. I remember one of my first picks plummeted 30%. It was a gut-wrenching lesson. But because it was just a small satellite, my massive, stable core of index funds protected me from a devastating loss. The whole portfolio barely flinched. That's when I truly understood why that 80-20 balance was so important. So, what happened? By combining the slow and steady returns of my index funds with a couple of big wins from my individual stocks, my portfolio grew by 200%. I had tripled my initial investment. But the biggest lesson wasn't the money. It was the shift in my mindset. First, I learned you have to start with that stable foundation. For almost any beginner, index funds are the most solid, low-stress way to begin. Second, diversification is your best friend. It's what lets you sleep at night, and it protects you from the rookie mistakes you're definitely going to make. And third, consistency beats timing every single time. Dollar cost averaging isn't exciting, but it works. It forces you to be disciplined, and discipline is what really builds wealth over the long haul. Growing your money isn't about getting lucky on some miracle stock. It's about having a plan and sticking to it. It's about balancing the safety of the broad market with the focused growth of companies you genuinely believe in. You don't need to be a wizard, you just need a roadmap. My journey from a nervous beginner to a confident investor. This is Growth Minded. Thanks for watching.